Welcome to No Free Lunch, Africa's freshest business and tech podcast with me, your host, Greg Stewart. Our episode today covers the murky and dark world of identity fraud. And to discuss this today, I have Tom Schoon, Sumsub's head of partnerships for Africa, as my guest. Tom is a Rhodes University graduate with over a decade of fintech and compliance experience. Tom is a regular commentator on Africa regulatory shifts. Welcome to No Free Lunch, Tom.
Hey, Greg. Yeah, thanks for having me. It's good to be here.
So first of all, can you give our audience a bit of detail on Sumsub and Sumsub's report? How is the data collected and collated? And is it a great representative sample of what's happening across the continent?
So look, Sumsub is a global compliance platform. It's what we call a full cycle verification platform. So in software, we talk about software as a service. This is compliance as a service. So if you can imagine a piece of software that you can plug in on the front end for your customers to be onboarded, for them to go through some rigorous checks quickly and effectively, but then also thereafter to monitor transactions within your business and within your ecosystem, and then to essentially also verify the full life cycle of that individual with ongoing monitoring, ongoing KYC, ongoing checks, ongoing screening. So Sumsub's been doing this for a very long time globally and indeed in Africa as well. And we've been really successful and seen some extremely high growth, especially in Africa over the past 12, 18 months, specifically because of the rates of fraud that we are seeing in Africa and the fraud rates, the growth of those fraud rates. So we did some massive interrogation of the markets in order to create this report. So from a data source perspective, we've gone over over 4 million fraud attempts. So we've analyzed over 4 million attempts across Africa. We've interviewed and chatted to over 300 fraud and risk professionals. We've interviewed and chatted to thousands and thousands of end users and account holders within the financial services industry and other, across gaming, across neobanking, insurance, trading, telcos, and essentially, we've come out with what we knew to be true, but essentially now we have the evidence that it is true within this fraud report.
Is this the first report you've done of this nature?
No, we've done several others. So we've had fraud reports going back at least 5 years, where we take the last 12 months stats, and we've done the same types of interviews across the globe within those segments to release this type of information. So, a lot of that reporting, can be found on online, whether it's our website or other. But essentially, we go quite far back when we do these reports to make sure that and to incorporate, let's say, the trends from previous years as well, so that we get some accurate data about the where fraud is essentially going and the way that fraud is transitioning. We've got quite a deep history of that.
Okay, let's talk about some of those trends. South Africa recorded good progress with a 31% year-on-year drop in overall identity fraud. And that was supposedly due to stronger regulation and advanced verification system. But the report also highlights a sharp rise in AI-driven impersonation, and with deepfake incidents surging by 269% year-on-year. That's a frightening number, although it wasn't close to the highest, but that in itself is quite a frightening number. So the report talks about the sophistication shift in fraud, and the report highlights 180% rise in advanced fraud techniques continent-wide. Talk to us about how the sophistication shift is manifesting differently in regulated markets like South Africa versus perhaps something like Nigeria. What does that mean for fintech adoption, for instance?
Yeah, so look, that Africa is adopting digital methodologies at a massive rate. So whether it's mobile money, whether it's fintech, and also in the public sector from an e-governance perspective, they obviously at different rates, but countries like South Africa and Nigeria, you've got hyper adoption of digital money and digital financial services. So what that comes with is a shift on how the bad actors try to defraud specific systems. So, gone are the days of manual fraud, or let's, for example, say phishing attacks via mail, right? So
Yes.
you and I might have experienced, several emails coming into an inbox from where we don't really know, but, we can identify those types of frauds quite quickly, but it's changing. So there's a massive shift from let's say, email phishing attacks into what we call deepfake or synthetic ID type attacks. So where you've got really good regulation, so let's, for example, say South Africa and Nigeria, those types of attacks, the mass attacks, so let's say someone kind of created 10,000 fake IDs and then try to defraud all 10,000 at once. That type of attack is now starting to decrease in regulated markets. So what they're now doing is they're saying the bad actors are spending a lot more time on targeted attacks. So they are building synthetic IDs, deepfake videos, etc., targeting who they want to attack in a much more focused way, right? Instead of throwing the net wide, essentially, they are decreasing the amount of attacks, but they're focusing more on the sophistication of the attack itself. So in non-regulated markets, you mentioned Mali, you mentioned a couple of the others that have grown exponentially over the last year. That is where those bad actors are shifting. So, a lot of them are shifting into the markets where the regulation is, let's say, not as sophisticated and not as established as in some of the other markets in Africa, namely South Africa and Nigeria. So, those attacks are much more sophisticated, they're much more advanced, and they're much more dangerous. We're at the front line at the moment in Africa from a digital crime perspective because of that specific shift. So I think it's also good to note that, the Africans are trying to defraud Africans at a high rate, but a lot of these attacks are coming from outside of Africa. So, the global, let's call it fraud market, has identified Africa as a hotspot. And it just makes it that much more important to develop systems that combat this type of sophistication.
Sorry, I'm going to interrupt you there for a minute. Why are these tools proliferating in Africa? Why is Africa being targeted, and why is it seen as a target? Is it because systems are poor, because regulatory compliance is low? What are the factors that are driving that?
So the main factor is a high mobile penetration, and then at the same time, poor digital literacy. Okay, so mobile money and mobile phones, etc., have had a massive adoption rate in Africa. Everyone's got a phone, and in fact, most Africans have got two phones. Those phones, on the whole, are smartphones. At the same time, and again, these individuals are transacting using those devices with the rise of mobile money in Africa. But at the same time, digital literacy is low, right? So, Greg, you and I, we can identify a deepfake quite quickly, or some kind of, let's call it a video on YouTube that we know is fake, right? Whereas the majority of Africa don't, right? So there's a low level of digital literacy, and the effects are devastating. So bad actors have seen that, and they've migrated their attacks into Africa, and are targeting those that can't see whether something is fake or not. And so biometric identification, biometric verification is that much more important. So the sophistication of the actual biometric verifications that now are prominent in Africa, the sophistication is growing, and the tools that can be used are getting a lot better to make sure that you block out those bad actors. But essentially, high mobile adoption, low digital literacy. That is the main factor, and that's going to rise. So obviously, digital literacy will improve, but it's going to be quite a long time before we see massive improvements in digital literacy.
Yeah, I know in South Africa there's an association of the mobile network operators that is taking quite a keen interest in trying to prevent fraud and reduce mobile fraud particularly. And they've had several shifts in their policies in terms of sharing data now, which is obviously like another regulatory minefield. But they're looking at how they can share data to be able to provide a greater scope of awareness of particular bad actors. They've now created this association that is driving this thing that will hopefully ultimately hold a central repository of all bad actor attacks. That can hopefully be then trigger warnings across all the networks rather than each network operating in a silo. And that's been quite an interesting development. What other things can be done, and what should companies and banks and so on be looking to do to try and deal with this surge of deepfakes?
Yeah, so then look, there's a couple of things that can be done, and you've mentioned one of them, right? The data sharing piece is extremely important. So essentially building out fraud network databases which can be shared so that these bad actors can't repeat. I think the biggest takeaway is that whether you're regulated or not regulated, a lot of these organizations have wanted essentially to be compliant, right? So they wanted to tick a box. And I think it's important to note is that 80% of all this fraud happens after what we call KYC. Right? So someone applies for an account and they have to give certain details about themselves. We call this KYC, or know your customer. And then they're essentially onboarded onto a platform. Thereafter, they start transacting on that platform. And that is when most of the fraud takes place. So first and foremost, that one and done approach that a lot of organizations are taking to say, right, we need to tick the box. We need to say that we're compliant. That's fine. But what happens thereafter, right? So you've onboarded this individual. How do you now monitor the activities of that individual? So it's important to note that fraud is continuous, right? And it adapts. So once these bad actors are on your platform, it's very difficult to get them off, or it's very difficult to actually find out what they're doing. So the best thing that organizations can now do, whether you're a small medium enterprise, whether you're a tier one organization, is you need to essentially unify the way that you approach fraud management. And the best thing to do is take a risk-based approach. All of these organizations, everyone has a different risk appetite, but you need to apply that same modality into how you prevent fraud. So the best thing to do is to unify all of the processes that essentially you need to do within that organization to remain compliant, which is making sure that you have one system doing KYC, doing transaction monitoring, doing business verification, AML, sanction screening, PEP screening, all of these types of things. What we see at the moment is these organizations have got a very fragmented ecosystem. So they have different systems performing these services in their organizations. You need to unify them. And so don't have separate silos for KYC, transaction monitoring, and risk. Integrate them, fuse that data together, and also implement continuous authentication. Use AI to measure and find behavioral trends within your ecosystem. The tech is out there now. There are some very, very good systems out there, including our own. And I think it's important that you kind of take a risk-based approach and then unify how individuals are transacting through your ecosystem.
Yeah.
And I think the last thing to note is, I think more and more important is that if your business does not have trust at the center of how they essentially do business, the competitiveness when it comes to trust within the African ecosystem is extremely important. If your customers trust you and know that by using your services that there are great fraud mitigation measures, you'll become that much more attractive. So I think to do this in a unified way and to take a risk-based approach to essentially de-silo these types of processes is the right way forward.
So how does industry play a bigger role in making sure that we move away from this? As an outside observer, you hear so much. I get it virtually on a daily basis in my inbox about, the risk escalations and the fraud escalations and the AI threats and all this sort of thing. You rarely ever hear of any prosecution of bad actors or apprehension or shutting down of these networks. What should be done? Is there a greater need for industry bodies to step in? I know, for instance, there's a fintech association of fintech companies in South Africa now that should they, as a representative body, start coordinating efforts across the fintech platform, as the mobile industry has done. Should there be an overall African approach to actually beating these criminals and bringing these unbelievably high rates of fraud down? What actually can be done to bring it to an end? And I don't wish you not to have a need for your service, but these levels here seem to be extraordinarily high, and it has a major impact on people's lives and businesses and so on. Where to from here?
Yeah, look, agreed. I think there's responsibility across the ecosystem. So, the association, like the FinTech Association, and these exist across Africa, right? There's a Kenyan FinTech Association. In fact, every African country has one. And what they do is they try and guide the regulators to do the right thing. They try and lead and make sure that the regulators follow, because they are the ones that are innovating new ways to combat this type of fraud. So I think firstly, the organizations themselves need to prevent it rather than try and chase the bad actors after the let's call it the money is gone, right? So at the moment, reporting happens to the regulators hours after the fact, right? So if I'm a bad actor and I've been able to defraud, maybe I've taken over an account and I've now emptied a bank account, for example, I am gone, right? I've disappeared. So prevention is a much better strategy to adopt. Right now in Africa, there are no good strategies of prevention.
Yeah.
And what that means is that these companies, the enterprises, the financial service providers, trading companies, telcos, etc., all have their own regulator, and they all report to the regulator too late. They need to do this in real time. And that's what the very good compliance as a service systems are doing. So they're enabling these organizations to report in real time to the regulator, but also they are able to prevent the fraud before it takes place. In other words, a robust KYC system can make sure that you reject the bad actor before the actual fraud takes place or before that bad actor gets onto your platform. So that's the best way to do it, is to prevent the fraud or to prevent the bad actors from getting into your system. And again, if you're reporting to your regulator in real time, the regulator has a much better chance of doing something about it. So on average, that reporting cycle is 72 hours, right? So let's say that there is an STR report that's gone through to a regulator. It's arrived 72 hours later. 72 hours is a very long time for someone to disappear. So the regulator says to the organization, right, there's been a fraud attempt or a fraudulent transaction has taken place. Now what do we do, right? How do you police that? How do you go after those bad actors? I think the right way to do it is to prevent it. So, for example, South Africa and Nigeria just got off the FATF list, off the grey list, because they have put much better, robust processes in place that are preventing that fraud from taking place. And the rest of Africa is not catching up. But everyone is aware. I think in Africa in general, people didn't really care about fraud until we actually knew that this level of fraud was taking place. So the organizations were wanting to be compliant, tick a box, but they didn't realize how much fraud was actually taking place. Now that we do, they're very much more interested in preventing it. So the right thing to do is to prevent it before it happens. And it's very easy to do that. Very easy to prevent fraud with some of these, with systems like Sumsub that are essentially fraud prevention tools, as well as compliance. Well, we call it compliance as a service, but it's fraud prevention.
Prevention is always better than cure. The old saying stands true. And, you kind of hit the nail on the head there, in that it would be way better for everyone concerned, obviously, if you can avoid this. The other thing, obviously, is also education. and educating the markets and educating people on what things they should look out for and what things they should be suspicious of, and that they should rather check first rather than just accept things at face value. And I think that kind of education could also be driven by regulatory bodies, but also by industry bodies, industry associations, and so on. And perhaps there's an opportunity to start building an education system that could go out with, everyone who gets a mobile phone should know that these are the things they should watch out for if they're using their phone for any kind of transaction. So there are things that can be done.
Absolutely. Fraud mitigation is not as complex or as people think. There's some simple things that we can put into place, especially in Africa, that would impact fraud in making sure that it didn't happen quite quickly. Yeah, agreed.
Well, Tom Schoon, we're going to leave it there. I appreciate the insights and the time you've taken just to come and chat to us a bit about the fraud landscape and the sophistication shift that's happening. And to the audiences out there, beware. Make sure you're doing checking things. Don't take things at face value, and use trusted networks and so on. So, Tom Schoon, thank you very much. I appreciate your chat.
Yeah, Greg, thanks very much. Thank you for having me on the show, and I look forward to the next one.
Thank you.